All right, if you're running a small business or you're a freelancer, you've definitely come across the Form 1099. But what if I told you that a tiny misunderstanding about this one form could mean you're accidentally paying taxes that aren't even yours?
I know, it sounds absolutely wild, but it's a real trap that a lot of business owners fall into. The source material for this explainer doesn't pull any punches. It says you could literally end up paying their taxes. Think about that. You pay a contractor for a job, and then you also end up paying the tax on that payment.
So, the big question is, how do you sidestep this super expensive mistake? Well, the good news is there's a simple two-filter framework that'll keep you protected, and we're going to break it all down right now.
Okay, first, let's get our heads around the trap itself. So you pay a contractor, right? That payment is a business expense, and that should lower your taxable income. But if you were supposed to send them a 1099 and you forgot, you're in a tricky spot. Because if you claim that expense without sending the form, you're basically waving a big red flag at the IRS.
So what do most people do? They just don't claim the expense. But here's the catch. If you don't claim it, that money just sits on your books looking like profit. And guess what? You pay income tax on that profit. So you've just paid the tax on money you already paid to somebody else. That is a direct punch to your bottom line.
So, how do we avoid all this drama? Well, it starts with our first and easiest filter, the type of business you actually hired. See, the IRS has different rules for different business structures, and we can totally use that to our advantage.
The logic here is actually pretty simple. The IRS generally does not require a 1099 for an incorporated business. We're talking C-Corps and S-Corps here. And why is that? Well, because these guys are separate legal entities with their own really strict financial reporting rules. The IRS already has eyes on them, so making you send another form is just redundant. If your contractor is incorporated, you're usually off the hook.
Right, but that brings up a really important question. How do you know for sure if they're incorporated? You can't just guess by their fancy company name. You need proof. And luckily, there's an official IRS form for exactly that.
And the solution is Form W-9. Before you pay anyone a single dime, you have them fill this out. This is the form where they legally declare what their business status is, and it's the key that tells you whether you even need to think about our second filter.
Okay, now for filter number 2. What if that W-9 comes back and shows they are not incorporated? Maybe they're a sole proprietor or a single-member LLC. Basically, a one-person show. Well, that's when the dollar amount comes into play.
For the 2025 tax year, the rule is super clear. If you pay an unincorporated contractor a grand total of $600 or more over the whole year, you have to send them a Form 1099. If it's under $600, you don't have to worry about it.
But, and this is a big one, this is where staying on top of things really matters, because this $600 threshold is about to change. And honestly, it's pretty good news for a lot of us small business owners. So check this out. Starting in 2026, that threshold is jumping way up to $2,000. This is a huge deal. It's going to give small businesses so much more breathing room and cut down on all the paperwork we have to deal with for those smaller one-off projects.
So we've got our two filters, their business type and how much you paid them. Now let's wrap this all up into a simple, foolproof action plan.
This 4-step process makes it so easy. And look, the most critical, absolutely non-negotiable part of this is step 1. Get that W-9 times before any work begins. This changes the whole game from reactive to proactive. You'll know right from the start if you need to track payments, and you won't be desperately trying to find their info come January.
And don't ever underestimate this form. When a contractor signs a W-9, they are handing you a legal document. And, just so you know, this goes both ways. If a client sends you a W-9, you have to fill it out. Ignoring that request can lead to penalties that start at $50 and can climb way, way higher than that.
We've been talking a lot about compliance and avoiding penalties, all the defensive stuff. But let's flip the script for a second. Understanding these rules isn't just about playing defense, it's about going on offense. It's about empowering yourself as a business owner.
When you get your 1099s right, you're making sure you can claim every single legitimate business expense you have. This isn't just a chore, you guys. It's a strategic move that puts you right in the driver's seat of your own tax situation.
And that is exactly what our source material is talking about when it says, this knowledge gives you a little bit more levers in your ability to control your tax situation. And if you're a freelancer on the receiving end, that 1099 just confirms your income, solidifies you as a real business, and gives you more options when it's tax time.
So I'll just leave you with this final thought. Take a hard look at your own process for paying contractors and vendors. Is it proactive? Are you getting those W-9s from day one? Because if you're not, you might just be leaving money on the table, or even worse, paying someone else's taxes.